Hi, thanks so much for joining in. Happy Friday to you. My name is Alex Matthew. With me is Mahima Vachajani. And this is Ask Profit, the show that gets you answers to all of your stock-related questions. To that end, if you've got questions for us, then a couple of ways that you can get in touch with us. One, of course, is the landline number where you can call us, and we'd love to speak to you. So get your phones out and dial that number. It'll come on your screen in just a bit. Or you can send us a message if you're feeling a little reclusive this Friday morning. We're happy to speak to you and chat as well. But let's take a look at where the markets are right now, and it's just about flat. And this is understandable considering the kind of run that you've had over the course of the last 5 trading sessions or so for the benchmark Nifty 50, particularly what you saw in trade yesterday. On expiry day, you had a 1.2% gain for the Nifty 50, and we're trending higher directionally. So a lot of the options data, a lot of the action in the future space also indicating that the channels are moving higher. We broke out of that range that the Nifty 50 was in for the longest time, since mid-May. In fact, nearly a month and a half, it stayed within that 700-point range. Now trading above 25,500 and moving closer to that 25,600 mark. The broader markets are looking a tad bit better. In fact, they are outperforming once again in trade today, up about 0.7% for the mid-cap index and about 0.7% for the small-cap index. And what that means is that from April 7th to now, the broader market gauges have both gained over 20%. And that means that your portfolios look significantly better than they did in March. But let's talk about a few individual stocks that you should pay attention to, and among them is Akzo Nobel. Really, this is the story of the day so far, and my co-anchor has a lot to say about that. In fact, she will be taking you through a lot of analysis that will come through later in the day. She's crunching those numbers even as we speak. But really, the story is about the acquisition that has been announced of the stake of the founders or the promoters of Akzo Nobel by JSW. And this is consolidation that is playing out in the paint space. And by the way, the open offer has also, or the value of the open offer has also been announced. It's very close to the current market price. The question is whether or not it makes sense for you as an investor, if you are an investor of Akzo Nobel, to tender your shares in the open offer, because well, the chances are that with this acquisition, prospects look significantly better for what has been a bit of a bit player in the paint space. Samir Dalal, Natwarlal & Sons stockbrokers, joining in this morning. Vikas Jain, Head of Research at Reliance Securities as well. Good morning, gentlemen, and happy Friday to you. Samir, I want to come to you first. It's an interesting story to begin with. What is your opinion? And by the way, we looked at the shareholding pattern and we found out that Asian Paints owns about 4.4% stake in Akzo Nobel, which is a twist in the story.
Good morning and thank you for having me. So it's eventually the deal is finally done. It's been speculated for some time. Now the problem for the industry per se is the fact that, you have competition coming in, aggressive competition, with deep pockets, and they're not going to relent that easily. So for some time, we believe, even though this deal is done and it helps a little bit of consolidation, and one of the players, JSW, which is acquiring Akzo Nobel, which are one of the new players. So, kind of they get an entry, or kind of they don't become more aggressive, but Grasim, Birla Opus is going to continue to remain. So, that remains a big overhang according to me. It's not going to be the easiest for all these paint companies to pass on prices. And for the simple reason that, market share fights are going to be on. Now, when it comes to the 4% that you're talking of Asian Paints holding Akzo Nobel, I don't think that changes anything significantly, for the simple reason that these are two separate entities. Asian Paints gets further diluted down in Akzo Nobel, so that doesn't change anything. They may hold on, they may sell out. I mean, we don't have an answer for that at this point, but we remain a little skeptic. We're not saying the prices need to correct further, because you've already seen price correction. Now, what we will probably see is more time correction. So, the stock moving sideways for the next 6 months, 1 year, maybe even a little longer than that, for the simple reason that we want to see where the market share stabilize, and after which point you can see that, the pricing pressures ease and these companies start gaining traction. But it's not going to happen overnight. This is something that's going to persist for some time. So be a little cautious when you invest long term. I still believe Asian Paints is a great story. because of the other businesses that they have. But net, the paint business is going to have a tough time for the next 1 year.
Okay. All right. So that's the view. While there is a splash of color in the space, it's all told looking like it's going to be a little bit of a dull couple of quarters for the sector as a whole. So bear that in mind when you make your decisions on this. And we've got several questions that have already come through. So let me start with some of them. We've got a question on Hyundai, and this is coming through from Kiran, who's writing in from Nellore in Andhra Pradesh. He has 98 shares of the company at a price of 1,960. He's wondering whether to hold it or exit. He's in a profit, and this has come through after waiting for quite a while. Vikas, hopefully you have enough data to tell him what to do at this stage. I guess it's been enough time. So what strategy would you employ?
Look at, no doubt the listing was been pretty disappointing. The stock increased for almost near to those 1830, 1860 odd levels for last few months. If you look at the recent history, the last 1 month, the stock has witnessed strong amount of strong up move and consistently making new 52-week highs. So after a prolonged down period where the stock has remained flattish to trade, the stock has witnessed some strong momentum. So we can continue with the investment. We believe the stock could scale further higher near to 2250 to 2280 over the next few weeks once the monthly numbers have been out. And then the first quarter numbers would be out. So because the stock has witnessed making a new high, so we can continue to remain invested.
Continue to remain invested in Hyundai Motors is the view coming in where charts are concerned. Our next caller, Lavanya, is calling in from Bengaluru. Lavanya, very good morning to you. How can we help you today?
Very good morning. I'm from Bangalore.
Okay.
I bought a share for PGIL, Pearl Global Limited.
Right.
I bought a 812. Now it is a 170172.
Right.
Shall I book the profit or hold it?
Okay. Got your question, Lavanya. And this is from a longer term perspective, I believe.
No, it's Mr. 6 months.
6 months. Okay, Lavanya. Then I'll take this up with Vikas. Vikas, what are the charts indicating for Pearl Global?
The stock is pretty poised. No doubt it made a high near to somewhere around 1600 odd levels, witnessed some amount of max correction near to 1230, 1240 odd. But again, has witnessed a strong amount of pullback. So we believe the textile space continues to do well. The stock has been a pretty an outperformer over the last 1.5 years. So it should continue to regain scale back near to those 1600 to 1650 odd levels. So she can continue to hold on.
So that's the view with regards to where Pearl Global stands. Our next question, if you can try to pull that up, I cannot see the next question, Alex.
I'll pull it up. So Venkatesh is asking about HUL. So he's bought 3 years back at a price of 2,435, and he's wondering why it is so weak in not performing at this juncture. So I guess it's a question about the space as a whole. And Samir, what's your opinion? Does that pick up? And would you say that now is the best time to try and look at companies like this? Because if you are going contra, and if you're looking down at the next 3-5 years, then some would argue that this is a good opportunity to accumulate some of these household names.
So Alex, absolutely. If you have a 5-year view, there's no harm in starting to acquire these companies. The problem is he's already been invested for a 3-year period, and he probably bought it during the momentum time when the stock was on a charge. And then obviously, we've seen what's happened, consolidation because of overvaluation. Stocks can't continue endlessly to trade at 60 times earnings. The valuations have come off. But the second thing that's also happened is that growth has slowed down in the space. Now, we do believe that growth will start seeing an uptick going forward. But the question is, what kind of valuation multiple should you assign to a company that may grow its volumes by, say, 7 to 8%, right? They're not doing anything out of the box. They're constantly just acquiring companies which are smaller. But they don't make a significant dent. Even when those new businesses grow, they don't make a significant dent to the overall growth because their general business is not growing at that large of a pace. We need that to come in. And this is not only HUL's problem. I think this is a problem across the board. You can look at Dabur, you can look at Nestle, all of them have actually been underperforming because the valuations were rich and growth is slowed down. Now, since the person has asked from a long term, and you also mentioned 5 years, what I believe is that when you extrapolate these numbers with operating leverage to some extent coming through, and these are very low cost, very capital efficient businesses. HUL, I think, does a return on equity in excess of 100% because of the low capital investments that they have, and the brands that they hold. So these businesses will continue to trade at these kind of valuations of 30-40. So you can assume anywhere between 8 to 15% growth CAGR over the next 15 years, which is reasonable given the high valuations across the board. Even though I'm saying that there are other stocks that can do well, but if you want a defensive, safe bet, HUL makes a good investment from a 5-year. You can get anywhere between 10 to 15% CAGR returns.
All right. The next question is from Vignesh from Canada. He's bought HAL at a price of 4,899 and he's wondering whether to hold or exit for a period of 1 month. He's in the red right now, losing about 6,400 rupees. Vikas, on the charts, what's the view?
Look at the HL is only one stock which is in the defense space, which has not stolen 52 high. Just all the stocks have simultaneously done turn by turn. So the stock has some amount of potential, no doubt. It has been consolidating between this broader range of around 4650, 4700 on the downside, 5050, 5100 on the higher side. So I believe the stock could see some amount of positive pullback and might again regain its glory near to those 5450, 5500. So we can continue to hold.
Okay, continue to hold HAL with respect to where charts are concerned from a 1 month perspective. Our next caller, Govind, is calling in from Hyderabad. Govind, a very good morning to you. I believe you have a question on Lemon Tree.
Yes, sir. Good morning, madam. Good morning, Alex, sir, and all of you.
Good morning.
Madam, I have purchased the Lemon Tree for 6 months back, madam.
Okay.
Present rate, what I rate, sale rate is nearly approximate.
Correct.
Approximate there. Can
Right.
I add some more, madam, for long-term investment or switch Indian hotels?
Switch to...
The consultation period is long back, actually.
Okay. Okay.
Would you like some more 2 lakhs rupees for Lemon Tree or else go for Indian hotel?
Okay, just want to get a sense, Govind, how much of your total portfolio is Lemon Trees right now?
This is only hardly 1%.
Okay, Govind, got it. Thank you. I'll take this up with Samir. Samir, what he's saying is that he still has 2 lakhs to invest in. He's already invested in 2,000 shares of Lemon Tree. Would you recommend him to go ahead and buy IHCL instead from that 2 lakh rupees or average out and add Lemon Tree?
So it won't be averaging. He's quite deep in the money. So that, I don't think that's a problem for him. He's making good money. But having said that, if you ask me between a Lemon Tree and an Indian Hotels, I'd obviously pick Indian Hotels because of the brand that they command. They have great expansion plan lined up over the next many years. They're doing it through the low cost model of management contracts, which means they don't own the asset, which means capital investments are very low. And given the brand that they have and given the explosion that we've seen in the past in the Indian tourism, which we believe is only going to sustain and keep increasing going forward for domestic tourism, be it religious, be it sightseeing, be it whatever, leisure, all of it is going to lead to great amount of growth in operating revenues for these companies as they expand. The operating margins will start getting better because, at the head office, the requirement becomes smaller for running these same properties. And as that happens, we'll see profitability increase. ARPUs will also keep moving up over a period of time. So we remain positive on the entire space. Indian Hotels is a better pick for me if you ask me on valuations as well as business prospects. So I would buy Indian Hotels over a Lemon Tree, but Lemon Tree is also a great company. It's just that the valuations have probably run up too much right now.
Okay, so valuation is a bit of a concern there. Let's talk about Supriya Life Sciences next. And this is, okay, so this is a question from Satyan and it's a little bit of an involved question. So he's asking whether to switch to something like an India Glycols for a 12 to 18 month time frame. He says that he bought Supriya Life Sciences a couple of months ago and it's not really moving too much. So between the two, what are the prospects looking like? And Vikas, what's the view on the chart?
In case of Supriya Life Sciences, this stock is just trading flat. If you look at this stock was witnessed good amount of upmove in the last calendar year 2024. And since Jan, it has been just trending between this 800 on the higher side and 630, 650 on the lower side. So he can put some amount of profits or exit for the need and can invest into some of the proceeds what it looks like.
Right. So that's a view on Supriya Life as well as India Glycols. All right. The next caller is from Hyderabad. I hope I'm going to get your name right. Vajrala, is that right?
Yeah, yeah.
Okay. Vajrala. Okay, good morning. And how can we help you today?
Actually, I have a Bajaj Housing Finance shares of 22,600
Okay.
at an average of 123 rupees.
Okay.
I'm expecting a price between 135 and 140. What is the future? Is it in near future or it will take time?
So, just so I understand correctly, is this a short-term view that you're seeking, or is it the long-term view that you're seeking?
Short term.
Okay, and
I'm
when?
a short term trader.
Got it. When did you acquire this?
Between April, May and June.
Okay, between April, May and June. So it's not really moved too much from your buy price. In fact, it is absolutely where it is, right?
1 week it reached 128.
Yeah.
I forgot to sell. I missed it.
Well, that happens sometimes when you're not looking at the screen. You can miss opportunities. But having said that, did you have a number in mind as to what you thought when you bought it? What was the level that you wanted to achieve?
135 to 140.
Okay, 135 to 140. And how long can you hold it, Vajrala?
You can hold it, but I'm expecting in 3 months or below.
Okay.
Is it possible?
Okay. Vikas, so essentially he's laid it out. 130, 135 is what he's looking at. He's bought a significant quantity. He forgot to book profits. So that he remembers, can we specify what levels are likely in the next couple of months?
So we can continue to hold, because if you look at this stock has was one of the high price in last year. It went strong amount of a move near to with a strong listing, made a high near to those one for 50, 55 or onwards. And since then the stock has declined pretty 38% retracement of the move. Now the past few months it has just been trading in this narrow range. So breakout is consistent, maybe a due over the next few weeks or the next few months what he's been looking through. Once the quarterly results would be out. So the stock has been consolidating and not declining and holding its 118, 119 band. So higher side breakout could be expected. So 130, 135, what is looking at can be expected over the next 3 months. It can continue to hold on.
Continue to hold Bajaj Housing Finance is the view where charts are concerned. The next question is from Chanchal, who is writing in from Mumbai and wants an outlook on Geo Financial Services from a 3 months perspective. A lot of technical questions we are getting today. Vikas, I'll come to you again. Geo Financial, what are the charts indicating and what's the support and resistance that you're seeing?
So the supports have been pretty far away, because if you look at the stock had a consistent move from these lows of 220, 230 or levels to 325, 330. So it has moved up to the higher band of the range. On the higher side now 340, 45 would be a strong resistance area. No doubt it can be a compounder for the years, but the entry point would not be so great at the current levels. Maybe he could look at a decline near to 295 to 300, which would be a 38% retracement of the current move.
Okay. All right. Our next caller is Sandeep. Sandeep is calling us from Lucknow. Sandeep, namaskar. How can we help you today?
Hi. This is Sandeep from Lucknow. So I wanted to ask regarding the HUDCO. This is in one of my portfolio products. So I'm holding 225 shares of HUDCO, which I bought approximately 10 months back at the rate of 337.
Okay.
And current LTP is looking somewhere 241. So I'm a long-term investor basically. So I just wanted to know the future outlook of the HUDCO.
Okay.
If you could help.
Yeah, okay. So I understand that. And when you bought this, I just want to know, Sandeep, what was the thinking like? What was the thesis? Why did you buy this from a long-term perspective?
Honestly speaking, I'm associated with one of the stockbroking company, and normally they suggest me sometimes this stock, but I do my research as well. Like during the time, they also suggested me for HAL, for BEL, for HBL engineering, and then I do some research from my side. I go read some financial statement and their future prospect, and based on that combination and permutation, I recommend yes, I can buy that.
Sure.
So that was the recommendation came from the one of the stockbroking company.
I got it. And so am I right in assuming that you're comfortable if the advice is to hold for the foreseeable future, you will do so?
Exactly. Yeah, I'm
Okay.
a long-term investor. I do have portfolio for around 30-35 lakhs, with
Got it.
10 to 15 stocks are there.
Got
so for
it.
specific, this stock, this was hit very hard in the last 8-9 months, I believe so.
I understand.
So if you can provide me a future
Yeah,
outlook for that.
I mean, it's perfectly normal to have one a big loser in a portfolio of that size. But Samir, specifically on HUDCO, if you've lost ground, and he has, what levels of 337, stock is currently at 240 or thereabouts. What are the prospects for the long term?
So look, all of these companies in the housing space, finance space are going to continue to grow. We're not worried about that. The problem is he's bought it at an extremely high price. When the momentum was very high in all the PSU counters, that is when we saw this massive run up happening even in HUDCO. And if you go back and look at maybe like a 3-year price, you'll see the kind of run up that you had from the older days, right? That momentum kind of investing, I've discussed this on this show today itself, saying that sometimes when you buy something in great momentum, it doesn't end up doing well for you, which was the HUL story. I think it's a similar story with HUDCO. The problem I face with HUDCO is valuations for this company still remain higher than what other companies in the space are trading at, barring maybe a Bajaj Housing, which was just previously discussed. But I think there are other companies which are trading at attractive valuations, growing at decent paces, have a relatively low NPAs, and we think the housing finance space is here to grow eventually. So from that respect, I would suggest a switch. We like LIC housing finance in the housing finance space and Samman Capital in the housing finance space, where we find valuations a little more attractive and the growth opportunity very, very strong. HUDCO will also do well, but I think the returns probably could be lower than that of the other two, which I mentioned, where I have valuation comforts. So I would make that switch, but then, I mean, it's the individual's call what he wants to do.
Okay, so that's the view with regards to where these companies stand. Our next caller, Manav, is calling in from Gurugram. Manav, a very good morning to you. I believe you have a question on Indian hotels today.
Yeah, good morning, everyone. This is Manav. I have a query on Indian hotels.
Right.
I've been holding with an average price of around 748, 50 shares of Indian hotels. And I want to continue holding for I can continue for 18 to 24 months. But I want to know that one of your viewer had a similar query regarding Lemon Tree. So one of the portion was resolved through his query, thanks to him. And just want to know whether I can hold it for another 18-24 months, and what would be the another correct price to average it out?
Okay.
If I want to average it.
Okay, got your question, Manav. Samir already said that he'll prefer an Indian hotels versus a Lemon Tree hotel. But Samir, can you elaborate as to why you would prefer an Indian hotel versus a Lemon Tree? And of course, if he wants to average out, what price do you think should he average out at?
So, it's very difficult to say why particularly on which business model, but I'll tell you what I like about Indian hotels. So they have, Indian hotels has hotels at every level, at the highest premium level, all the way to the Ginger, which is the low cost, affordable budget hotels, right? Then they have these Ama stays, which are these long-term, not long-term, but these bungalows and things like that they rent out, which are also something that is, gaining a lot of traction, and they're constantly increasing on that side as well. Plus, they have their food business within that, which the food and banquet business, which is very, very profitable at the end of the day. So given the kind of opportunity and the growth that they have with the new properties coming about, where they will keep growing these businesses, and they can always spin out some other operation, like for example, the food business, they can create a brand within that, which they're already working on, Cumin. All of this will eventually lead to value unlocking, according to me. Now, it's not going to be a 2-year thing. If this person is only investing for 2 years, in 2 years, you're not going to see all of these developments. But what you're going to see is the new hotels coming up, the scale up in revenue, the scale up in profitability. Again, these stocks have run up, from COVID time. I think Indian hotels used to trade at 50 or 60 rupees, and that ran up all the way to 900. So a lot of the positivity got captured in. Now it's going through a bit of consolidation, and it probably will go through that kind of consolidation for even a little longer. But over a period of 2 to 3 years, we believe a 20% CAGR in a company with low capital investments, continuous growth because of 25-30 properties that they add every year will lead to increase. Now, why I particularly like Indian Hotels over Lemon Tree I discussed is the valuation. Lemon Tree is trading on a trailing basis on a 12-month trailing at about 100 plus times earnings, whereas Indian Hotels is at 70. Now, if I project forward, given the kind of growth that they have, Lemon Tree is closer to 82 times, and I think Indian Hotels is closer somewhere to 52 times. So they're not cheap in any which way, but between the two, I would prefer an Indian Hotels. And like I said, because of the low capital investments and the scalability of the business model, I think Indian Hotels can continue to do well. Plus, they have their international businesses also, which they are going to try to scale up. And as that also happens, internationally, a brand kind of a business that they have gets a value. So I think Indian Hotels has a lot more hidden value than a Lemon Tree has.
Fantastic. Sameer, thanks so much for that. And by the way, we've spoken about the paint space, we've spoken about consumers and something like an HUL and that entire pack. We've also spoken just now about hotels in quite a bit of detail. So if you're a long-term fundamental investor, this is all insight that is very useful to you. Vikas, I understand that you have to leave us. Thanks so much for joining us today and for answering all the questions that you did. And Sameer, do stay with us. On the other side of this very quick break, we'll continue to take more questions, so do stay tuned.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
That's huge. That is a biggie. It's out of
Gold Plus, clear glass. Car ho ya near, sab kuch dikhe clear.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen right now. All right, with that, let's also welcome in Ravi Singh, Senior VP at Retail Research Religare Broking, joining us now. Ravi, hi, a very good afternoon to you. I'll take up the next question. The next question is from Praveen, who's writing in from, we don't have the place, but okay, his question is on Endurance Technology. And he's asking as to whether he can buy Endurance at the current levels or not. Ravi, what is your view with respect to where charts are concerned for Endurance Tech?
Ma'am, if you talk about Endurance, then I can say that there is a very strong support around 2620 to 2580 levels, and now the next target would be the 2750 to 2780 level. So I can say that if the new investor want to buy, then there is an opportunity to achieve some target. So I can say that buy at current market price with the stop loss of 2620 with the target of 2750 to 2780 levels.
Okay, all right. Kishore Kambampati, who's writing in from Hyderabad, is asking about CG Power, which he's bought at levels of 596 during March this year. He's looking for a view for the next 18 to 36 months. Should he buy an average at this point And if so, is this the right level to do so? What's the view if you have coverage, Samir?
Sorry, this one we don't have active
Oh, okay,
coverage.
fair point.
I know the company, but I don't want to comment on this
No,
one.
no, that's fine. Because he's sought both technical and fundamental. At least I can give him one of the two. Ravi, what's the view on CG Power?
Alexi, CG Power is more volatile stock, right? So there is a volatility around 590 to 750 level. So I can say that just wait and watch and hold your position with the target of 780 to 850 levels and put the stop loss around 650. So if you talk about a power industry, then I can say that there is another opportunity in Tata Power also and Power Grid also. So just hold and wait for some time.
Okay, all right. I'm not sure if we're going to have a view on this, but I'm still going to take the call. Ravi, hi, thanks so much for calling us. Ravi's calling us from Chennai, by the way. Ravi, how can we help you today?
Yeah. Hello.
Yes, I can hear you. Please go ahead.
Yeah. So I'm holding a 200 shares of Sunflag Iron Limited. I bought it around 230 rupees.
Okay.
So I need to know that whether I can hold it for long term or can
okay.
book profit like. I'm sitting in profit of 14,000 rupees around.
Yeah, I got it. Ravi, I see that this is a spring steel producer. So it's a manufacturer of alloy steel products. Have you studied it? And if so, what was the thesis when you bought it?
So actually, one important thing is they are holding 11% stake in Life Metals and Energy Limited.
Okay.
11% stake.
Yes.
Okay. It comes about around the present price, it's about 6,000 crores nearly.
Mm-hmm.
So the valuation of, if you add that, book value will go up around 5 rupees.
Okay.
Already they are sitting on a huge book value of around 200 rupees.
Mm-hmm.
So added to that, it will be about 7 rupees nearly.
Mm-hmm.
So based on that, I bought it about 3 months back.
3 months
back. So
back.
I need to know whether I can hold it for a longer term or book profit.
Understood. Okay. And you are in the green right now. I understand. Okay, fine.
Exactly,
I'm not sure, Samir, if you have a view on this, but on the strategy, perhaps you can give us some perspective considering what he's done. And he's bought bases, and he's explained that, the holding in Lloyd's. So what would you recommend that he do?
Yeah, so unfortunately no coverage, but yes, if he's holding that stake and which is valued at a higher price than what the market cap holds, that kind of gives you the discount that you're getting the operations of Sunflag Iron and Steel for more cost, right? So there is obviously hidden value, and that value unlocking may or may not happen. So we have recommended stocks like that in the past. Unfortunately, a couple of them have not played out to the way we thought that they would, the value unlocking. But I think given the downside is limited, you can continue to hold as long as the core operations of the business remain profitable, and the investment company is profitable as well, and you don't expect a massive correction in that. I think value unlocking eventually has to happen, and you will be able to make some money. And your investment is a small one, so you can continue to hold on to it. It's not a big problem.
Okay, continue to hold Sunflag Iron is the view that Samir has. The next question is from Mayank, who's writing in from Alwar, Rajasthan. His query is regarding transformers and rectifiers, and he's holding 1,500 odd shares, bought at 487 a piece, sitting on profits of roughly 1,000 odd rupees right now. Wants to know if he can continue to hold it for the next 6 months to see some more profits on his cards. Ravi, what would you suggest? What's the chart indicating for transformers and rectifiers India?
Ma'am, chart is consolidating and creating a bull run in next couple of weeks. So I can say that just hold your stock with the stop loss of 475, and target would be the 522 immediate target. And stock is looking very promising, so just hold it.
Okay. All right. By the way, okay, let's take one more question, and we've got Shivakumar calling in from Bengaluru. Shivakumar, very good morning to you. How can we help you today?
Good morning, Mr. Alex.
I love your voice.
First, I would like... can you hear me?
I can hear you. I'm saying that I love your voice. Please go ahead.
Yeah, thank you very much. I would like to congratulate NDTV Profit, because you are now getting directly connected with the common man to discuss all their investment needs.
Yeah.
I'm really happy for it, and you're scoring over other business channels these days.
I'm glad to hear that. That was the intention is to connect with all of you because I think we get insight in the manner in which that you invest, right? So by understanding that, it gives us perspective on how to bring you the best quality of insight and information. Please go ahead with your question.
I hold around 106 shares of LIC India.
Right.
At the rate of 895 rupees.
Okay.
I don't know, it is a long hold and I'm making a very minimal profit these days.
Right.
Should I hold on to it or is there any attractive news flow about LIC India of entering into health insurance sector so that it's going up or it is consolidating at this level?
Okay, so that's a fair question. And am I right in assuming that you would hold for the long term if you had the choice?
Yeah, sure.
Okay. So Shiv Kumar's question, Sameer, I'm going to come to you. There was a bit of a spurt for life insurance companies. I want to say about a month back, and they keep coming back into the fore off and on. The question is, of course, the overarching theme, penetration still very low. Prospects are good for the space. All of that exists. But if you're talking about LIC per se, if I look at the fact that their term insurance share in the overall pie is still very, very low. And so if it continues to head towards a higher participation of that product, one would assume that its operational metrics would also improve going forward. Does that bode well? Would you continue to hold? Would you add more at the current level?
So honestly, I would add more to the current level. I remain very positive on LIC, given you just mentioned everything, that the penetration in India is still very, very low, and we are massively underinsured as a country. So the opportunity is so large with LIC having the kind of reach that it has, the brand value that LIC holds in the hearts of a rural Indian customer is fantastic. And they can play that out and be able to grow their business. The embedded value still is undiscovered to a large extent. Not undiscovered, but if they actually look at monetizing some of the assets that they have, I think it's trading at a steep discount. I think there's a lot of upside. Earnings will continue to grow. I would add on, I think the stock would probably move up. The big overarching problem or the overhang on this company is going to always remain is that government needs to dilute its stake down further, given it's a listed entity, even over a 5-year period. So every time we see a rally close up, maybe if the stock runs up to 1200, government may come up with an OFS, and that obviously hurts the prospects. Barring that, absolutely, it's a fantastic investment. I wish some strategic investor would come in and take a big stake and, say, help the government out by saying, okay, now we don't need to do that. I think this stock would probably have a one-way rally closer to 1500.
Yeah, okay, all right. So that's a comprehensive view on LIC. Shiv Kumar, hopefully that answers your question. And do keep calling us. We love to hear from you, and your feedback is very, very welcome. Let's talk about the next show, by the way. I keep telling you about Know Your Company, viewers, because this is an important show for you to pay attention to, particularly if you're a long-term investor, because this show gives you insight on an individual company every day. And today, the stock that they're focusing on is Coromandel. And there are a few questions that they're asking. Can a better monsoon, and it's been a decent monsoon so far, it's expected to be a decent monsoon going forward as well, is it likely to aid fertilizer stocks? And you've already seen a few insecticide, pesticide and fertilizer companies move up in anticipation of a better produce. The other questions we're asking, of course, is can it continue to gain market share? Will margins improve? All of that and more. And we have an analyst, we've got Prashant Biani from Elara Securities talking about the prospects for Coromandel, whether or not it's the best pick in the space. Watch out for Know Your Company later today. But let's take the next question. We've got Paytm that we're talking about next. And in fact, this is a question from Manoj, who's writing in from Hyderabad. He has bought at levels of 1,001 rupees per share, which is just about 100 rupees or so higher than the current market price. And he's looking at whether he should hold or sell at this juncture. Ravi, it's had a very good up move. The question is, what do you do if you've not made money in this up move, if you've lost a little ground? And on the charts, what are the levels to watch out for? Where would you put your stop loss, for example?
Alexei, trend is your friend, but unfortunately, Paytm friend is not a trend, you can say that the bull trend. So there is a strong resistance around 920 to 950 levels, and next target would be the 820 level. So I can say that use Paytm, but don't buy a stock. You are in loss, but I can say that take exit from the current level, and you have the next two opportunity. A lot of opportunity you can buy at Power Grid or Tata Power or by Bank of Baroda. So lot of opportunity is there, and you can recover your loss all these stocks. But Paytm, I think just take exit.
Okay, sell Paytm is the view coming in where charts are concerned. Our next caller, Dheeraj, is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you today?
Good morning, ma'am.
Good morning.
My query is regarding Prestige Estates.
Okay.
I bought 100 shares of Prestige Estates at 1680 rupees today.
Okay.
So, are these the right levels to enter? Actually, the space is consolidating.
Right.
So, are there any better counters in this, like something like Phoenix Mills or Godrej Properties or DLF? Or should I enter the same? Should I sell this counter and enter at lower levels? I would like to know it from both the experts, ma'am.
Okay.
Regarding the entire space.
Okay. Okay, got your question. No problem, Dheeraj. Dheeraj, that's our pleasure. I'll take this up with Samir. Samir, we've always seen that if the markets are in a bullish trend, it's real estate that always takes a hit. And what he's saying is right. It's a period of consolidation for these real estate companies as of now. But he's gone ahead and bought Prestige 100 shares at 1650. Is this the right counter to play the real estate theme according to you?
If he has a long-term view, I think Prestige will continue to do well. The problem simply lies in the fact that the stocks run up a lot. The valuations are not cheap. I understand that now because of the JVs that they're doing, or the JDs rather, the joint developments that they're doing, where they don't put in the money for the land. They get the land from others and then they develop it and earn a profit on it. Given their brand, they've entered the Indian Bombay market, which is quite large, and they have a lot of projects going there. Of course, they're one of the leaders in the Bangalore market. So we're not denying the fact it's a great company, but valuations are expensive. Now, since your caller asked the question, is there something else he could consider in the real estate space? So I do believe there are companies which are still fairly attractive in the real estate space. It's not Godrej. Godrej has also run up a lot, and valuations are not that cheap. It's Keystone Realities, which is Rustomjee. Okay, I would like to put a disclaimer that we have invested in this company. We think the growth prospects in the Bombay market continue to remain very good. Rustomjee has a good brand name here. They have good project developments coming about within the city. And as more and more of these JDs and more of these redevelopments that they are focusing on keep getting traction, we think Keystone will continue to do well. Bowman has been running the company extremely well. Valuations are not as expensive. It's a debt-free company. They raised equity recently. I mean, they raised some money recently and they've actually become debt-free. So buying assets and growing their business will not be difficult for a company like this. And we think the upside is more than that.
Okay, so Keystone Realtors is something that you should keep on your radar. It's had a pretty decent up move. It is up close to 3% in trade today as well. The next question is on Motilal Oswal Financial Services. It's a question from Shikha Gupta, who's writing in from Bengaluru. And she's wondering whether to buy it. And I'm assuming that she's got a short-term time frame. Ravi, on the charts, what are the prospects for Moti?
I think the next target would be the 950 to 980 levels. So a lot of volatility at this level because it is still trading at a strong resistance around 900. So if you want to buy, then wait for some time. Once it trading around 850 or 830 level, then look attractive, and risk reward ratio will also good. So I can say that put the stop loss of 820, buy once it correct, but otherwise the next target would be the 950 levels only.
Okay, so that's the view with regards to where Motilal Oswal stands. Our next caller, Suresh, is calling in from Hyderabad. Suresh, hi, a very good morning to you. How can we help you today?
Very good morning. Is it right time to take an entry in Titan, as it is showing that cup and handle pattern breakout yesterday, and I'm looking for the short term for 1 month. Is it right time to take an entry for 200 points early?
Okay, got your question, Suresh. I'll take this up with Ravi again. Ravi, the stock has been gaining momentum since the time dealer checks are suggesting that Q1 jewelry sales have been on a higher note as compared to what the street was expecting. What do you suggest? Is this the right time to make an entry? Is there a further upside that's still being seen on Titan?
Sir is also said talk about a cup and handle pattern. So breakout is happened, but risk reward ratio is not up to the mark. So I can say that buy, but buy a little quantity, right? If you want to invest 100 rupees, then you put money only the 40 rupees at current market price and put the stop loss of 3,500. Target would be the 39 to 4,000 rupees, but it will take time. So I can say that if you talk about the next 1 month, then it will take time, at least 3 months. So follow the with his stop loss and target.
So we've got an interesting question from Wilson, and Wilson's writing in from Mumbai. Samir, he's named a few stocks, one of which you've spoken about already. You've spoken about Indian Hotels at some length. But he's also talked about Rallis India, he spoke about ITC and Tata Tech. And he's initially thinking of putting 4 lakh either in Rallis India or Indian Hotels or Indian Hotels, and 2 lakh additionally in either ITC or Tata Tech. But I would invite you to suggest alternatives that he can look at beyond these. I don't want you to restrict it to these 4 names that I've suggested. If you do have to buy and purchase right now, considering that markets have moved up so substantially over the course of the last couple of months, where would you find value?
So banking and NBFC space, I still believe there is some value that is available. Some of the NBFCs, something like the L&T Finance, M&M Finance, which cater to the rural side, where we believe interest rate cuts will spur growth in like the two-wheelers and the tractor space. Both of these companies can continue to do well. Valuations are not so expensive. We believe the growth will remain strong. The microfinance sector can come back. That could help them as well. So, that is one. The banking space, we've always said IDFC is something that First Bank, that's something that we really like. IndusInd, which has gone through a lot of pain. They've cleaned. Now the book is probably as squeaky clean as you can find it after the management has changed and the company's taken all the write-offs and provisions that they could in the last quarter. So the new management that comes on gets a great opportunity to grow. So banking and financial is one. We believe that the consumption space is something that will see a great uptake, especially discretionary spends. So the two-wheelers, the auto industry is something that we like. We think a Hero Honda and a Bajaj Auto are great investments. But given that he has asked 4 companies from them, Indian Hotels, we told you we like something, is that Tata Tech, we are as bullish. We believe, the opportunity in Tata Technologies is quite good, given the fact that the auto space which they cater to is going to do well. The aerospace space is something that will continue to do well, where they cater to. They've got their act together in the sense that they've got their products which are almost up, and once the delivery of those starts, then we'll see that space doing really well. So Tata Tech is also something you could look at. Then, like I said, in the QSR space, we like companies. We think something like a Westlife Foodworks, now they changed the name, Westlife Foodworks, which is McDonald's India, can continue to do well. We think with the cuts in taxes, with EMIs starting to look better, discretionary spend on restaurant businesses will do well. They've still got a huge way to scale up. I mean, we're talking of 500 stores of McDonald's in West and South, and that can become maybe 5,000 over the next 20 years. So the scale-up opportunity is extremely large. Operating leverages are fantastic. And, once the SSSG comes in, the valuations will look rather cheap. Right now, they look a little expensive. So you can look at a RPA in that as well, restaurant brand, which is a competitor, which is Burger King. Then you have Sapphire Foods, which has the Pizza Hut. You have Devyani, which has Pizza Hut, KFC, and the young brands under them, and of course their own homegrown brands, which they have for Mango and things like that. So I think there's a lot of opportunity in those spaces as well. But since he wants to limit himself to, if he wants to limit himself within those 4, I would say Tata Tech and ITC are our top 2 picks, over even an Indian.
All right. We're running out of time, so let's run through a couple of questions quickly. Pradeep is calling us from Bengaluru. Pradeep, sorry to rush you. What's your question?
having LT Foods, 100 shares bought at 120 rupees. It's run up high.
Yeah.
So should I hold it or for long term or book profit?
Fantastic. And I kudos to you for keeping your question so short. Samir, a quick answer to this. You heard it.
Pradeep, you can hold on. Company is doing well. But Pradeep, next time you're buying a stock, do let us also know what you're buying.
I see. There's
Too small an investor.
Okay, there you go, Pradeep. See, you've got a request from the man himself, Samir. Thanks so much for tuning in. Hope that answers your question. Hold on. Alex is calling us from Kerala. Alex, very good morning to you. How can we help you?
Hi, Alex. I have a query on Tejas Networks. The buying price and everything is there in the chart.
Yes.
I want a long-term view.
Okay.
Whether their capex and the government's plans for indigenous production of telecom will it support their future growth? Is the market cap is a hurdle, or they are in future how they are going to perform?
Got it. I got your question, and congratulations on keeping your question as short as you have. But Samir, the most recent order win for Tejas Network is a shot in the arm, very large order at that. Would you hold on from these levels?
No active coverage. Can you ask Ravi to take this one, please?
Yes, of course I can. Ravi, Samir, I would actually invite you to come to studio and take my place. You're doing a great job. But Ravi, what's the view on Tejas Network?
Yeah, I think is looking promising. So the target would be the 950 to 980 level. So longer period, definitely it will hold, and stop loss is 670 for closing stop loss.
Gentlemen, the next part of the show is a rapid fire round. Both of you know what this is about. We'll throw as many questions at you over the course of 2 minutes. Do keep your answers as concise as possible. The first one is an Equitas small finance bank, and Barvin from Tamil Nadu wants to know. He's bought at levels of 72.5. Should he hold for the short term? Ravi?
Put a stop loss of 64. Target is 75.
Okay, the next one is DB Realty. Sushila from Bellary is writing in. She's holding at the rate of 556 and wants to know the targets on this counter. Ravi, once again to you.
I think just quit your position because it's not looking promising.
Okay, Ravi, 2 stocks to invest in for a period of 6 months to 8 months. 50 lakhs available. What would that be?
List is long, but BOB, Canara Bank, Tata Power and Power Grid.
Okay, Karthikeyan is asking if Texmaco Rail is the right counter to buy. Samir, is that right?
Yeah, you could buy into this one. You could buy this one.
Sham wants to know, Samir, Vodafone Idea, given everything that you know, would you suggest to buy at this price?
I would stay far, far away. Sell.
Far away from Vodafone Idea. Amit Soni is asking about Idea Forge. He's holding 1275 shares at 650 apiece. Wants to hold for the next 2 months. Ravi, should he continue to hold?
Yeah, definitely. There is one idea you should avoid, but Idea Force, you should continue your buying with the target of 650 to 700 levels.
Okay, all right. Idea Force is not an idea you should avoid. Larsen and Toubro bought an average price of 1,739. Bhanu Kiran from Hyderabad wants to know whether to hold it or to invest in another stock. Samir?
Hold on to LNT. It's good company, going to do well.
Okay, Ola Electric is the next counter. Pankaj is asking if this is the right time to exit or wait for a better point to exit the counter. Ravi?
Yeah, better to buy.
Buy, okay, buy, okay.
Better to buy, he said, so sell.
Better to buy, okay. Yes. Samir, okay, so it's a sell. Okay, yeah, that needs to be clarified. Standard Glass, 166 rupees per share. Technical view for the long term is being sought. Ravi, what's the view?
Put the stop loss of 162 and target would be the 200 to 205 levels.
Okay, on that note, gentlemen, we're all in a Friday mood, and thanks so much for bringing a smile to our faces, and wish you a great weekend. Thanks so much for joining us.
Thank you very much, Alex and Mahima.
All right. Well, that brings us to the end of this edition of Ask Profit. We've tried to answer or get as many questions answered as possible. If we missed you out, well, I hope that you benefited from some of the stocks we discussed today. From Mahima and myself and the team that put this show together, happy Friday and happier weekend, and do stay tuned. Up next is KYC.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored
Hello and welcome. I'm Harsh Saita. With me is Varsha Chandani. We're going to host KYC today jointly, and we're going to speak about Coromandel International. It's a fertilizer company, and there's just so many reasons why fertilizers in today's topic is extremely relevant. One, you have a monsoon which has been extremely good, Varsha, and therefore we're seeing good traction across the board. You're likely in a good monsoon expected to also witness good rural and farm income, which should translate to good numbers for fertilizer stocks. And Coromandel International is one of those. The second one is China halting specialty fertilizer exports, and therefore it impacts Indian fertilizer companies because they import the raw material to produce the fertilizer. Varsha will obviously give us that explanation, but that is the other key element which is a moving part. And the third piece on the geopolitical side is any impact on imports even outside of China could well be a kind of a concern with regard to raw materials for the fertilizer industry. And what could all of that do in terms of impacting Coromandel's numbers is what I want to know. The second one is the retail margins versus the B2B margins. Currently, Varsha, they have 750 retail outlets, if I understand correctly. They want to double or triple this in a very short span of time. This could well mean likely better margins, but the question is how much better? And we were debating that, and therefore it will be interesting to understand what the impact of this on margins is. Margins in FY21, if I recall, were 14%. Yes. They've come down to 11% now. And therefore, this could be an interesting pivot. Even if top line growth is not there, some cushion on margins could help. So that's point number 2. 3 is, what is the next lever of growth? Therefore, you want top line to grow, and we have an Elara report which says that there'll be very strong growth on the top line, at least for this year, FY26. I want to understand what those levers are. Cash flow has been a bit of a lag, especially in FY24's numbers. I want to understand whether that is a common business practice or issue which the company will continue to face going forward as well. The fifth or the sixth piece is the impact of the fertilizer subsidy reduction. that causes an impact on fertilizer companies. And this time around, the subsidy has been reduced by 13% in the budget, which is a large quantum and which will impact your numbers for fertilizer stocks. Now, I want to understand Coromandel versus others. Given all of this that's happening, there's plenty happening, right? Given all of this that's happening, how do the numbers add up? Do valuations make sense? Because Coromandel is just in a league of its own, as you will see in our analysis. And then there are all the others. So that is the other piece. Can it continue to gain market share? And expansion and sustainability of return ratios, which are extremely solid. But let's not delay this any further. Let's start talking about the company. And we're going to do this slightly differently today. Because it's a complicated subject, we're going to allow Varsha to start off because she's better at the complex stuff. And maybe I'll ask her a few questions and maybe we'll get better perspective and explanations on this. So Varsha, take it away.
Yeah, so thank you, Harsh.
Now,
let us just talk what exactly Coromandel does. So, so they offer a diverse range of products and services across farming value chain, and they're specialized in fertilizers. You have crop protection, you have biopesticides, specialty nutrients. We are gonna understand this in a very simple way, and they operate in 760 rural retail outlets across 3 southern Indian states. Now let's just divide their business segments. You have crop nutrition. Now what does this mean? This means your simple fertilizers and complex fertilizers like NPK, DAP, SSP, urea. Now we'll just dissect this. Now what is NPK? It's nothing but nitrogen, phosphorus and potassium.
Sorry, before we go ahead, can we have those full? Yes, please. Thank you. That's perfect.
NPK is nitrogen, phosphorus. Now nitrogen is for the green color that you get in your leaves, and the leafy growth that you see. It's because of nitrogen. Phosphorus, when you want to have strong roots and good flowers and fruits, you need phosphorus. So it's like a bone builder and energy booster, I would say. Potassium for overall plant health, and also for the disease resistant. We all know that the pests and all that ruin the crops and seeds. Yeah. So potassium takes care of that, and of course the water regulation is also taken care by potassium. Now urea is like, so consider it as a protein shake, providing a heavy dose of nitrogen specifically for strong and leafy growth. DAP, that is diammonium phosphate. Now this is very important. Now so imagine plants like humans, and they need food to grow big and strong. So 2 of the most important foods for plants are nitrogen and phosphorus. And so DAP is nothing but a popular fertilizer that gives a plant a good growth, a powerful combination of phosphorus for strong roots and good fruit, good development. And nitrogen is for green leafy growth. This is so nothing. The overall, if you want your plant to grow greener, to have good fruits, to have pest-free goods, you need these fertilizers. Simple as that. Now,
and sorry, Varsha. So is there a distinction between the 3, and probably help viewers understand that between an NPK, between a DAP, and between an SSP? What are the key uses of each of those? Just in 2 lines.
So as I said, so nitrogen is for the green and
Correct.
leafy growth.
Correct. So it's for growth, basically.
Yes, for growth.
So NPK is for growth, DAP is for...
So phosphorus, again, strong roots. And then again, you have urea for protein shake, providing a heavy dose of nitrogen. And when it comes to DAP, it's a popular fertilizer that gives a powerful combination of all this.
Perfect. So you have growth, you have one fertilizer for ensuring that a good combination is generated within the plant, again aids growth, and then you have SSP.
Yes.
Which
SSP is nothing but again a kind of fertilizer that you use in your plant growth.
Perfect. So there are 3 types of fertilizers, and then you have the entire value chain as well.
Exactly.
So does Coromandel cater to the entire value chain?
Yes, exactly. So they are into urea, they are into phosphorus, they are into
Is there
DAP.
anything that they are not into?
I don't think so.
Perfect.
I would say the next segment, that is crop protection. where you have herbicides, pesticides, agrochemical sector basically.
Correct.
They are into that segment also, and which they want to increase it. But mostly the highest or the more revenue contribution comes from your fertilizer sector. That's it.
Okay. Should we move on to specialty nutrients?
Yeah, sure. So then you have specialty nutrients, which they provide the secondary nutrients or micronutrients or water soluble and